David Bahnsen with me this morning. David, you like this bill, don't you? You think there's a lot of real good stuff in it.
There certainly is. And it's a very important thing that you extend those tax cuts from before. So I look at two pieces. You got to extend what you already had. I don't consider that new tax cuts. Right. It's status quo. Then there's some other things they're going to do that I think are supply side pro-growth. I wish they were doing more on the spending side. I do, but I understand the politics of it.
Is it most pro-business, pro-worker tax bill that you've ever seen since Reagan?
No, his bill in 2017 was the most pro-business. He cut the corporate tax rate from 35% to 21%. That was huge. This is just simply extending some of the personal tax rates, but it's full expensing for businesses on capital expenditures. That's a big deal.
So you get growth out of this, and that's what we want, isn't it? We want economic growth.
The issue, you definitely want economic growth, but debt gets in the way of it, and I want them to cut spending more over time, but they're limited by the political reality.
What do you make of the president's two speeches this morning?
Yeah. Look, he loves the cameras. He loves doing the whole deal. And I just want to say something. I don't agree that it's about getting your party in line. Article 1 established Congress of the Constitution. Article 2 established executive branch. I think Congress is supposed to have its own mind. And then that you're supportive of the president's agenda, but you're allowed to push back on things and debate and try to get the best bill you can. So I like independent-minded Congress people, but then at the end you get together and get something done. I'm all for that. I just don't agree that people having a debate about issues is a bad thing. It's the way the Constitution set it up.
It's inconceivable to me that this bill would just go down to utter defeat. I can't see that happening.
There's never been a time that they weren't going to end up extending the Trump tax cuts. The issue is what else they're going to get done and when. Because if you wait till November, that's a lot of uncertainty in markets along the way.
What do you think? Are we going to get this thing done?
It looks as if they're going to, but at the end, I don't think what they're going to get done is as big as I had hoped it would be.
In May, the House gets it done. In June, the Senate gets it done.
Yep.
In July, the two sides get together, Senate and House, rationalize the deal. In August, the president signs it.
I think you could actually have it signed in July.
Okay, but you would be happy if they got it signed at least by August.
As long as he doesn't sign with an auto pen.
He got into that, didn't he? He couldn't resist. He just could not resist. That's a fact. All right, David, you stay with me, please. I need some help for the rest of the
Yes, sir.
Before we get to the opening bell, I want to bring in David from Jamie Dimon. He's been warning that the economy, that we may be subject to stagflation. He says that the risk of stagflation that Wall Street doesn't understand. What say you?
I'm always more worried about the stag part than the inflation part because I think we've been in a relatively stagnant economy since the global financial crisis, meaning we've been at subpar growth. We're growing less than we used to. The 1 year after Trump's tax cuts in 2017 going into 18, that's the only year we got 3% growth. And then you had the COVID moment and there's been disruptions, but I don't want the stagnation part. The inflation part, I believe you get downward pressure when you make more supply. Milton Friedman taught us this. Too much money chasing too few goods. Let's make more goods, make more services. You can solve inflation. But I don't want the stagnation. And I think that the biggest cause of stagnation is excessive government debt, which is why I told you earlier I was worried about the spending side. It crowds out the private sector. It crowds out the good things that happen in an economy.
Real fast, you said after the 2017 tax cut, we got 3% growth.
Yeah.
If we get the new tax cuts from Trump, will we get 3% plus?
No, I don't think so, because I think that that's just doing exactly what we already had. Then there's some new tax cuts in there that will be helpful, but you got to remember, debt to GDP is way higher now than it was 7 years ago. So the economy is fighting uphill against the level of government spending and government indebtedness that crowds out other private sector activity.
That's a problem.
It is.
David, thank you very much indeed. Stay with me for the next half hour. Appreciate it. How about Home Depot? They just reported earnings. Looks like they did quite well. The stock's up 2%.
They're also looking at not raising prices, despite some of the tariffs conversations that we've been having.
I don't know what kind of a dividend Home Depot pays.
They've been good, and they've been a good grower, and we passed on this back in 2020, and I've been upset about it ever since. Just so we're all clear, they will raise prices because of the tariffs. They're just smart enough not to say so.
Okay. General Motors is saying something about exporting to China. And what are they saying?
They're going to stop shipping U.S. exports to China for now.
Why are you laughing?
They're going to stop exporting to China, and I'm going to stop reading romance novels.
I love a romance novel,
I don't read them,
David.
though. You might. But see, my point is I don't, just like they don't export to China.
Yeah,
less than 0.01%.
There's nothing goes there.
No.
Nothing at all. So I get a Waymo app, then what do I do?
You order a Waymo, say I want to go to the ferry building. and off we go.
And it works?
I have not gotten in a crash yet.
No, that's not the point. I mean, the little module come quickly.
Yeah. Yes.
It did.
They're there. They have their little spinning sensor things, the technologies. And if you want an emergency exit, you say, get me out of the car right now. It pulls over. Out you go. We'll throw you out.
You're laughing at me because I'm a Neanderthal.
No, but I'm laughing because I'm more like you than I am like her. I feel like I'm in between your ages, but I'm more like, I'll just walk.
In between our ages?
I am between your ages.
How dare you?
Yeah, well, math.
That's ageism, man. That's what that is. All right, now back to you. You're getting a lot of this show this morning, aren't you? Your stock picks. Kenvue again.
Yeah, so I did two things today, a winner and a loser. What I mean by a loser is one that is down on the year. Kenvue is one that's up on the year. And it's paying a 3.5% yield, growing high single digits every year. The stock is doing well. It was Johnson & Johnson's spinoff. And yet this is a sector that the whole market is underappreciated. Kenvue makes Tylenol, baby shampoo, Neutrogena, big consumer brands.
And it pays what?
Right now, 3.5% growing. And then the next company we'll move to is Merck.
Okay, show me Merck.
Because I want to make clear for listeners, this is a big thing for me to say. Merck is trading at 8 times 2025 earnings, 11 times last year's earnings. You have a 4.3% dividend yield now on Merck. It was 2% about 4 months ago. The stock is down. There is bad news out there, this price fixing thing that they're threatening to do and so forth. That is, the bad news is now priced in and I believe represents a compelling value for the best pharma company on the planet. Great pipeline of drugs, great R&D for new drugs, and a ton of money to do M&A to buy while they grow. And you're at a very low valuation with a high dividend yield.
4.3% I'll take. Thank you very much, David.
Yeah.
David, you've got 30 seconds to tell me what's wrong with stablecoin.
It's a gnat in search of a windshield, in my opinion. There's not a problem it's trying to solve. We do not have a problem of high-cost transactions. It's doing better at the operational risk, the cybersecurity risk, but those are still there. So if you're going to take those risks, there has to be a reason, and I can't figure out what the reason is. And then let's also be clear, several high-profile stablecoins crashed completely, lost 70, 80, 90% of value. You just have to be very careful. That's all.
Gnat looking for a windshield. I'm going to steal that right
And
off
I did it in 30 seconds.
No, you didn't. It was a bit longer.
38 seconds.
Thank you. Thank you, David.
Thank you, Stuart.
For the extra 8 seconds.
Yes, sir.